Anybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little
This market turning around in the last 30 minutes this morning. Good morning, good morning. Futures positive 0.6%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York, we begin with the big issue, a commodity shock.
This extra move up really triggered by the potential disruption to oil supplies around the Ukraine crisis.
This is an enormous amount of oil.
Russia produces, 11 million barrels per day.
This is not just about oil. It's about grains. Look where wheat prices are. It's about metals. It's about copper. It's about aluminum. It's about all the different commodities right now.
Clearly, a number of the ports in the Black Sea are not taking boats at the moment.
There are several market participants that are self-sanctioning.
The inability to move these key commodities out of the largest commodity producer in the world.
You can't get a ship to pick up that commodity. People are backing away.
What is the impact of that on prices and more importantly on growth?
Unless significant supply, starts coming onto market,
commodity price inflation is going to stay higher.
Team coverage starts right now. Bloomberg's Anne-Marie down in D.C., Maria Tadeo in Brussels. And Maria, we have to start with this quote from the German economy minister. It reads as follows: "I wouldn't support an embargo on imports of fossil fuels from Russia. I would even speak out against it." On those words, crude turning around. It was positive, now negative. Equities flying up 0.75%. Maria, your read on those comments in the last 20 minutes.
Well, what it shows is this huge dependency that Germany still has on gas, and that this transition cannot be done overnight. That is the economic reality of it, and that is a real politic that the German government is trying to put on the table. But Jonathan, having said that, I know there is a real debate happening behind closed doors between the different countries, of course, that form the European Union. We talk about 27 countries. They all have to agree on everything unanimously. And I do know, just to give you an idea, some of the conversations happening behind the scenes is that countries like Poland, which share a land border with Belarus, that are incredibly concerned about Vladimir Putin and his actions moving east, they still continue to say we will have a debate about a full ban. Anything that has to do with Gazprom, anything that has to do with oil that comes from Russia, from gas that is coming from Russia, that is at this point blood money, and it should not be a concern for us. We should tackle this issue head on. I also know that behind the scenes, and officials argue, we've talked for weeks, months about the dangers of coal, how this is so bad for climate, but But when it gets serious, we'd rather still say we want to be clean, continue to use some of these energy and not turn to coal. So there is a very real debate happening here, which I believe will get more tense as we enter another week of fighting.
Brent crude down 1.3%, 111, came close to 120 overnight at 119.84. AMH, your comments on this particular story. Here we are, Germany saying no. Just as the momentum was starting to build in that direction on this side of the Atlantic.
Well, Jonathan, I think the administration has made it very clear. Although President Biden yesterday had said that energy is on the table, they want carve-outs for the energy industry because look at where the prices are headed. And it's not just oil and gas. And we should note on gas, billions of dollars go from, in terms of transit fees, go from Russia to Europe. Those transit fees, Ukraine makes money off of and needs that money. So there has been this energy carve-out. And this is something they've wanted to make sure that they could keep within the global system because of Russia's importance. And it's not just oil and gas. Aluminum, wheat, corn, all of these agricultural and hard commodities, base metals is needed. And the problem is that if you take Russia out of the market, you're going to see a spike in prices, which we saw this morning. And what does that mean for the everyday consumer around the world? That feeds into the supply chain and it feeds into our grocery bills. And what is a gallon of oil going to cost at the gasoline pump?
Just going through the numbers right now, Russia and Ukraine supply more than a quarter of world wheat exports. 1/5 of corn sales, 80% of sunflower oil cargoes. For Europe, you know the energy dependence story. Crude from Russia, about a quarter of Europe's crude, 1/3 of its natural gas, in Germany much more so. Anne-Marie, the US is different though. I go through the numbers that Bloomberg has crunched. 3%. In 2021, Russian crude comprised 3% of US imports. Just 3%. And refiners in America, some of them, AMH, aren't touching Russian crude anyway. How difficult would it be for America actually to execute this embargo on their own?
Well, it doesn't sound like a lot, but when you look at the Russian exports into America in terms of crude, it's about 600,000 for petroleum products. 200,000 of that is crude. And the reason why some of these refiners really need Russian crude is because the type of crude it is. It's very thick, it's high in sulfur, it's viscous. We sometimes have in America a little bit more of a sweeter crude. And the numbers, Jonathan, are a little bit staggering when you start to rank them. Canada is first, then it's Mexico, then it's Russia ahead of Saudi Arabia. But there's growing momentum on Capitol Hill from the likes of Senator Manchin, from the likes of Senator Murkowski, that they want to ban U.S. imports of Russian crude. This would definitely impact the market. Although when you look at the number 3% doesn't sound like a lot, it would impact the market. But you make a very valid point. People are not touching this at the moment. Ships don't want to go there. 300% higher to get freight costs. You have to get war insurance. Then you have individuals who are just nervous about the legality of all. How would these transactions work? Where's the financing coming from? And then there's the moral obligation, a reputational risk of putting it on the line. People just don't want to deal with Putin's Russia right now. These commodities at the moment are seen as toxic assets. You see that through the commodity market and elsewhere too. Maria, I just wanted to give you the final word. There are some talks taking place today between Ukraine, between Russia as well. Vladimir Putin, though, in the headlines that I've seen from Interfax, Maria, he's got different ideas.
Yeah, and Jonathan, it's very difficult to see how we go from a military solution to this, to a diplomatic way forward, because in a call with Emmanuel Macron, some of the information that is feeding of it is that Vladimir Putin reiterated that Russia has military and political goals to meet and comply in Ukraine and will fulfill this operation. So the mood music that we get from Russia is that they're not intending on backing down. When you speak to the Ukrainians, by the way, they say we'll sit down and we'll hear what they have to say. But if the Russians believe that we're going to capitulate after a week of war, after everything that we've seen in our cities and ports, they're dreaming. We're not going to capitulate. And that is the feedback also that I get from a lot of normal, everyday Ukrainians who are still in the country and who say, after everything that's happened, a negotiated solution looks very difficult. Russia has done a lot of damage. It will be very difficult for Ukraine to forgive what's happened overnight.
Maria, wonderful coverage as always. Thanks for being with us. Maria Tadeo there, AMH down in DC, staying close and staying with us through the hour. This turnaround in crude, we're negative 0.9%, 112 on Brent. We were positive 6% and close to 120 overnight at 119.84. And we turn around on this line from the German economy minister. I wouldn't support an embargo on imports of fossil fuels from Russia. I would even speak out against it. We'll see if that move in crude actually sticks at 112 and let's call it 40 cents at the moment. Let's bring in the team. Global X ETF's Morgan Dowdo. Axonics' Peter Cecchini and Chris Harvey of Wells Fargo. Morgan, help me understand how you're pricing commodities and how you're pushing that through the equity market and elsewhere.
Well, Jonathan, as you rightly said, Europe is highly dependent on the import of energy from Russia. And I think that the main consequences for investors to look at is how it will accelerate or decelerate the transition to clean energy sources in the weeks and months ahead, because Europe faces an immediate crisis because reserves over natural gas are already depleted. So there are two main scenarios like investors could look at. It's either it will decelerate the transition to clean, like Germany is potentially looking at continuing coal-produced energy, or it will accelerate it with more adoption of the nuclear energy, and that is probably likely to be countries like France. So in terms of investment opportunities, over the last week, we saw tremendous interest into clean technologies, renewable energies, and in particular hydrogen and solar investments. It seems to be that investors are buying the trend that actually the transition will happen faster. So these opportunities are there. Another opportunity is to look at uranium, given that nuclear power is probably the only renewable source of energy that could have the scalability and also could be the cheapest to achieve result and independence from the energy from Russia quickly.
Yeah, that's the energy story. Peter, I know you're looking at soft commodities, agricultural commodities, more specifically, the importance of Russia and Ukraine. Peter, you and I are on the same page. I don't think we can fully get our hands around what this could mean, not just for the economy, but for global politics too.
Yeah, food prices in particular, with Ukraine being the proverbial breadbasket of Europe in many ways, and Bloomberg and your team have done a great job sort of articulating just how much wheat and barley and other agricultural products come out of the Ukraine. Interestingly as well, when you think about the Arab Spring, for example, and what higher food prices have done, and the sort of unintended consequences with respect to social stability globally. That's one very sort of scary potential sort of uncontemplated consequence of what's going on with food supply in the Ukraine into Europe. And of course, meat prices will go up, and all of the knock-ons to that value chain will also go up. And, there are other commodities that people may not be all that aware of. Neon is another commodity that comes out of the Ukraine. You might say, well, who cares about neon? No one uses neon signs anymore. But neon happens to be an important component of the lasers that etch chips. And while less dependent than it was 10 years ago on neon out of the Ukraine, the industry is still dependent on neon. And of course, we all know that that industry is already dealing with shortages and supply chain issues. So the fragility of the global supply chain with respect to what's going on in the Ukraine, I don't think can be underestimated. And it's just, again, not the energy and food markets, it's in other areas as well.
Chris, do you get the feeling that the commodity market is in the driving seat for risk appetite?
John, let me change the narrative, or let me change the discussion, because I think the most important thing, and the thing that we're missing, and a thing you're going to hear about more and more, is energy security, is essential goods security. People are forgetting about price at this point in time, and they're worried more about security. The Europeans, when they moved to green, they really underpriced or didn't really appreciate the cost of energy security, and they're finding it out the hard way. Now nations are saying, wait a minute, we need to worry about energy security, but we don't just need to worry about energy security, we need to worry about essential goods. And what are the essential goods? And the problem that I see, this is a big issue for the global trade and for free trade markets. This is going to be something that causes systematic inflation for some time, because you're going to shift back, because of that security issue, you're going to shift back to a regional and national model. We need to produce things. We need to have access to things that are essential in our region with our allies, or we need to produce it domestically. And by definition, that's inflationary.
Some really deep thinking going on at the moment. Morgan Dowdone sticking with us alongside Peter Giacchini and Chris Harvey. Chris Harvey came into the year slightly bearish, less constructive, and the price move has made Chris now a bull. So, Chris, we're going to talk about that around the opening bell. CPI a week away. To Chris's point, inflation 7.9%, the estimate in our survey so far. Very few estimates are in, but 7.9% is the estimate so far. Let's get you some moves ahead of the opening bell. 17 minutes away. Here's Abby.
Well, John, right now we do have those S&P 500 futures at session highs up about 0.8%. That has everything to do with that stunning reversal in oil that you were talking about that occurred just about an hour ago or so on Germany's stance on Russian exports of oil. That is taking the oil complex down. So this is not helping out the S&P 500 today with these major oil companies lower. But again, the reversal in oil giving the overall market a bit of a lift. So the question is whether or not this will stay in place, because this is the first down day in 5 for energy. If we take a look at another part of the commodity complex relative to stocks, we will see that the gains remain. This is the grain complex, the fertilizers. You can see that Mosaic, CF Industries, and Bunge all higher. The question is, how will the day play out? Volatility remains the name of the game, John, but right now we're getting a little bit of relief as oil is down.
Abby, thank you. Coming up, Fed Chair Powell, stay the course.
Given the current situation, we need to move carefully. I'm inclined to propose and support a 25 basis point rate hike.
Geopolitics takes center stage. That's next. This is Bloomberg.
Introducing DeWalt commercial mowers. With thick decks, powerful engines, and a professional cut, they're built to put in the work. Our tools have been trusted on the job for almost 100 years. We've just found a new job site. DeWalt. Guaranteed tough.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
From New York City.
We're in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
Russia invades Ukraine.
We have proven our strength.
The nature of this war changed yesterday.
Turn to Bloomberg for up-to-the-minute reporting from around the world.
Ground troops are closing in on the Ukrainian capital.
Swiss abandon neutrality.
And analysis of what it all means to you.
Energy is on the table.
We could see oil prices moving closer to 120.
There is a lot of interest to offload Russian assets.
Look to see more companies announce their exits from Russia.
Keep it tuned to Bloomberg Television and Radio.
I do think it will be appropriate to raise our target range for the federal funds rate at the March meeting in a couple of weeks, and I'm inclined to propose and support a 25 basis point rate hike. And to the extent inflation comes in higher or is more persistently high than that, then we would be prepared to move more aggressively by raising the federal funds rate by more than 25 basis points at a meeting or meetings.
Chairman Powell staying the course as the Fed grapples with rising prices and mounting geopolitical risks.
The near-term effects on the U.S. economy of the invasion of Ukraine, the ongoing war with sanctions, and of events yet to come remain highly uncertain. This event does seem to be one that is a game changer and will be with us for a very long time.
Let's get more with the man himself. It's Mike McKee. Morning, Mike.
Morning, John. Well, Jay Powell has a problem in that what the Fed does is raise interest rates to slow the economy, and that raises the unemployment rate historically. So he's got a bit of a dilemma here. How far can he go at a time when the economy may be slowing because of the war in Ukraine? You look at the chart there and you can see every time the Fed is raising rates, unemployment goes up. That's going to be a political problem for Powell as well as an economic one. But as you say, he's staying the course for right now, and he's playing a little bit of politics inside the Fed because he's saying, I favor 25 basis points, which tells the market that's what's going to happen in March. But he's also saying we could do 50 later because he's giving a message to the hawks on the board that they are being listened to and that he is open to it if they need to raise rates more quickly. Inflation is likely to fall this year. That was the other message from Powell yesterday. They're sticking to that transitory idea, but without using the word transitory. They think we're going to see inflation by the end of the year, significantly lower than it is now. We will get new forecasts at that Fed meeting on the 16th, so we'll see how far they mark it up from their previous estimates. And as you noted, and as we heard from Jay Powell, the Russian war brings a lot of uncertainty. The only thing we do know is, absent the war, we're still seeing inflationary pressures. And I'll show you a chart that gives you part of the, an idea of what part of the problem is for Jay Powell. You look at mortgage rates, the white line there, they've gone up more than 100 basis points in the last month or so, but look at existing home sales. They are still rising. So if we're going to cool off the economy, it is going to take more than what the Fed's done so far.
Mike McKee, thank you, sir. Citi scrapping their view on 50 basis points for 2 weeks' time, now expecting 25. This is the words of Andrew Hollenhorst. We now expect a 25 basis point hike March 16th, goes on to say, as opposed to our previous base case of 50. Their outlook, though, now includes 50 basis points for May instead. Then 25 basis points at each meeting through the rest of this year. They peak at 2.75 to 3% by the end of 2023. Morgan, to you, just quickly, where do you think this Fed funds peaks? 2.75 to 3 is the call from Citi. What's yours?
Well, I think the Fed will continue to hike because their mandate is about inflation, and inflation is real and it's already there. Whereas the uncertainty statement from Jerome Powell is underlying uncertainty about the outlook, but also uncertainty on the extent of the negative impact on the economy. Therefore, it can't be pricing the reaction function of the Fed. So I think the market is pricing currently rise about like 5 rate hikes this year. It's slightly more prudent given the circumstances, but inflation is still the main focus, not only for the Fed, but also for other central banks in the West.
Chris, this is tough. You've got a 47.15 call, I believe, year end. You can run me through and update that. I've got people out there taking comfort from the Fed hiking less. As you pointed out, inflation's going to come in close to 8% potentially next week. Crude seems to be on a one-way ticket to destroying demand. Can you take any comfort from the Fed doing less this year for all the reasons we're talking about?
I think you can. And one of the things we're beginning to talk about, we're talking about stagflation. And now that's not great, right? But what happens in stagflation? That's usually an environment where growth does better. And what is the S&P 500? That's more of a growth index. And just back to the Fed has a dual mandate. It's price stability and it's maximum employment. Part of this inflation they cannot fight. And as Jay Powell said, there's a lot of uncertainty here. So at the margin, what that does is it slows things down. And for the market, that's a pretty good thing. And ultimately, they have to be pretty conservative because I think they have more influence on maximum employment than inflation at this point in time. But at the end of the day, keep an ear out for stagflation because this is something we're going to be talking about a lot as we go forward in time.
Chris Harvey sticking with us alongside Morgan Dowdown and Peter Giacchini to weigh in on the opening panel in about 8 minutes' time. You'll all recall recently that Elon Musk sent some Starlink hardware over to Ukraine to help with connectivity to the internet there. That's the helping hand that Elon Musk is giving to the Ukrainian people at the moment, just to help with internet connection. At the moment, internet connection is held up pretty well. For those of you that like to follow what happens with SpaceX, a little bit later this morning, SpaceX Falcon 9 launching 47 Starlink satellites to low Earth orbit at the Kennedy Space Center in Florida. Terminal subscribers can watch that. They can watch the launch on Live Go. From New York, I want to run you through the events leading up.
I'm a millionaire. I'm not a millionaire. I'm a millionaire. I'm not a millionaire.
Crypto is complicated, but as a tax expert with crypto experience, you can hand your taxes off to me. You do your thing. We've got your taxes. Intuit. TurboTax Live.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Five minutes away from the opening bell in New York. Good morning to you all. Your equity market set up as follows, up 0.6% on the S&P. We kicked higher about an hour ago off the back of some comments from the Germany economy minister pushing back against an oil embargo, an energy embargo more broadly for Russia. Equities turned around, crude turned around as well. It was positive and then negative. Briefly, the story looks like this in the bond market, 2s, 10s and 30s. At the front end of the curve, we build that back out. On day one of Chairman Powell. Day two today, we're dead flat on 2s at 150, 180, on 10s at 187.15. That's the price section. Let's get you some morning calls. First up, Morgan Stanley downgrading Intel to underweight. The analyst shifting to more actionable options with favourable valuations following a meaningful re-rating in growth stocks. That stock is down 1.4%. Evercore upgrading Southwest Airlines to outperform. The analyst highlighting its strengthening balance sheet and accelerating demand for travel. And finally, KBW downgrading Citigroup to market perform. The analyst expecting a prolonged period of subpar returns given elevated expenses. Coming up, from tech to banks, Russia's invasion of Ukraine impacting every single corner of this global equity market. From New York.
We can all recognize potential, but to truly unleash its power, we need a tool that takes
at the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
24 seconds away from the opening bell in New York this morning. Good morning. Your equity market pushing higher by 0.6% on the S&P, on the Nasdaq by 0.8% on the small caps, up by 0.4%. Things turning around in the last hour or so. Switch up the board and get to the commodity market. Crude turning around. It was positive, pushing 120 on Brent, then pulling back. WTI, a break of 110 to the downside now, down by 0.9%. There was a fear. I say fear, I use that word loosely, forgive me. But obviously the idea that perhaps we might get an oil embargo on Russia in this commodity market. The Germans pushing back this morning, pushing back in this market, in the commodity market at least, turning around. Crude still negative. Euro dollar negative still too. We're down by 0.4%, call it 3 now, to 110.89 for a fourth straight session. In the commodity market, as I say, we're lower. And as we're lower, yields just giving up some of the move from earlier. 187.32 on 10s. Look out for the front end. Chairman Powell, day 2, coming right up. 40 seconds into the open. Let's get you some movers. Here's Abby.
John, let's start out with something that we have not seen in 5 days, and that is the energy sector dropping. It is the one S&P 500 sector that is lower today on a mixture of these energy names. Of course, on that oil reversal that you were just talking about, ExxonMobil, Devon, Occidental Petroleum, Schlumberger, all lower. Again, the first day in several. That drop in oil really providing, though, a tailwind for stocks overall. So we do have the S&P 500 higher. Lots of the big names are helping out, including Apple and Microsoft. A little bit of a relief there that perhaps this oil situation that we've had going on could see some sort of an end. You also see the banks rallying. So overall, we have stocks higher as energy cools off.
Abby, thank you. Let's talk about that turnaround in energy and touch base again with Bloomberg's Anne-Marie down in Washington, D.C. Anne-Marie, the Germans pushing back. As we've talked about, the United States might have different ideas. Where does this leave President Biden for his next steps if he needs to take them?
Well, President Biden did say energy was on the table. But at the moment, Jonathan, the fact of the matter is that the U.S. and the European allies, they've decided there are going to be carve-outs for energy trades. But in the reality of it all, why they still want energy trades to continue, because they've spoken about how Russia is so important to the global market, individuals on their own, businesses are shunning these assets. It's very difficult to find a ship to go pick up Russian crude, even if you're seeing these steep discounts. At one point, almost $20 lower than benchmark Brent to go pick up Russian Urals. Refiners don't want to touch it. This potentially could be a legal issue, reputational issue. So they're just shutting it on their own. I think you were the one that phrased it, quote, self-sanctioning on their own. The issue that the Germans are talking about is the fact is they want to make sure that that Russian gas continues. Natural gas especially is key for Germany. More than 40% is coming in from Russia. We also should note it's key for Ukraine. Ukraine gets a lot of transit fees, billions of dollars, because they have pipelines from Russia that go through to Europe. And this is how Europeans heat their homes.
Anne-Marie, walk me through what you hear from your commodity contacts, from your days at OPEC. Do you get the feeling that the people in the oil market are stepping back temporarily or stepping back permanently from Russian crude?
It's a good question. The OPEC Plus is clearly looking at this, and they want to maintain that modest production call. We haven't really seen them coming out saying we're going to help fill those gaps. The oil market right now, Jonathan, is waiting and seeing, not just Russia. There is talks, and there was optimism from Tehran, from the foreign minister, Hossein Amir Abdollahian, talking about the fact that we were close to a potential nuclear agreement. If that is the case, we can see an immediate impact on the market, because that would mean Iranian barrels would hit supply. And then potentially that would ease some of these concerns about what's going on in Russia. So I think individuals at the moment are stepping back. They don't want to touch these assets at the moment because of all the reasons I just outlined, legal reasons, reputation reasons. But they're also waiting to see what happens in Vienna with these talks and if there is going to be another JCPOA.
Anne-Marie, thank you. Thank you very much, AMH. Just on the companies pulling back here, we wrote a great story on this here at Bloomberg in the last 24 hours. I want to go over the numbers again because I think it is important. For Europe, they're very dependent on Russian crude. We know that, Russian energy. In America, for the total imports here in America, 3% in 2021, our calculations when we crunch the numbers. And the number 3 refiner, the third largest US importer of Russian crude, this is what they had to say about entering into new supply deals in Russia. They won't, quote, for the foreseeable future. Companies are pulling back. And by the way, that line self-sanctioning, not mine. I stole that from Javier Blas at Bloomberg Opinion. We've seen company after company pulling back from Russia. Same story this morning. You just sit looking at the Bloomberg headlines. It's headline after headline. Intesa, the Italian bank, saying they'll have a strategic review of their presence. Volkswagen, another one, stopping production. They won't export to the country either. And Katie Lyons, as you've experienced through the morning too, looking at Europe, waking up here in the United States, it's company after company, step by step, every single day.
Yeah, the list just keeps getting longer. You also had Nissan now saying is going to halt exports of its cars to Russia. My question is, when does Renault come in here? We were speaking with Carlos Ghosn, the former Nissan Renault chairman, about that issue earlier, John. And of course, that's weighed heavily on Renault shares over the course of this crisis. And there's really just been big baskets of losing stocks and a much smaller basket of winning stocks. Those winners probably speak for themselves. Energy and aerospace each up about 5.4%, 6.25% respectively. Energy benefiting from what until this morning had been pretty persistently higher oil prices, as well as clearly there is a link there to defense spending. But what's been down? Consumer stocks, a lot of them that have exposure to Russia, the likes of Coca-Cola and McDonald's. You also have banks that have been put under pressure by yields that have moved lower for the most part. That index is down about 6% over the last 2 weeks. But of course, another that is very sensitive to that higher yield story has been technology. And we have seen some big moves in tech over the last couple of days. In the NASDAQ 100 average swing over the last 30 days has climbed to nearly 3%. That is the highest since going back to May of 2020. And the Information Technology Index, which is what we're looking at here, has swung 2% or more 6 times in the last 12 days. And that leaves us virtually unchanged over that time period. As we know, usually the direction big tech moves in is the way that the broader market moves in, given how heavily weighted those stocks are. But by and large, stocks in general have been moving together. What we're looking at here in white is the correlation between individual stocks within the S&P 500. That has been rising substantially. At the same time, we've seen the markets being roiled broadly by headlines. It is all about that macro picture, and that is driving a narrative in which a lot of stocks are moving in tandem, John.
Kelly, thank you. Let's pick up on that tech story. This is the line from Citi and Rob Buckland and his team. They say this: we raise U.S. equities and global IT back to overweight. Both are growth trades that should benefit, they go on to say, in relative terms at least, from the recent sharp drop in real yields. Peter Cecchini, I want to come to you, sir. Do you agree?
I tend not to agree. I think the recent action that we've been seeing in equities is really largely a product of capital flows, right? Capital flows out of Europe. We see European markets down. We see the SX 5E and 7E both taking it hard. And those flows are coming into the United States and, flowing into Bitcoin as well, which has obviously become a really important alternative, especially for Russians and Ukrainians. Bloomberg had a story on that this morning. So I think the idea that growth stocks are going to benefit in this environment is misplaced, especially because I think, as Chris said earlier, stagflation, which I have not talked about at all until a recent note, I think is on the table now. When we see energy shocks, like we're seeing now, there's almost invariably a slowdown or a recession. And I was getting concerned as oil, our call was for oil above 100 before the invasion of Ukraine. And that already had me concerned that was going to lead to a growth slowdown. And now, of course, given recent developments, that concern is heightened. And I think that's going to affect equities across the board, including big tech.
Chris, you're perfectly positioned to help us out here. Just looking through history, I think a lot of people are wondering this. What do you do in an environment where inflation could be going higher and growth expectations could be coming down? Jonathan Golub at Credit Suisse said this: historically, stocks have performed poorly during periods of high inflation. The data indicates, however, that elevated interest rates are the true culprit, not rising prices. Chris, when you and the team sit down and do these kind of studies, what do you see?
So we do look at rates. We do look at break evens. We look at, and not just nominal rates, but real rates. And what we're beginning to find and what we're beginning to see, and I think you know this, we were very much in the reopening camp, cyclicality. We wanted to barbell that with quality. But now what we're beginning to see is that duration trade or that growth trade has repriced and repriced aggressively. I think what we're seeing with the Fed is boxed in. The Fed, because of the uncertainty, they have to move slower. They have to be more conservative. It's an inflation that they can't control unless they kill off demand or unless they really impact demand. And they don't want to do that because the other part of their dual mandate is maximum employment, and that won't work out so well. So you're right. I think we're beginning to transition back into this growthy type environment. On Friday, we upgraded, for the first time in a while, small cap growth. They're significantly oversold. Short interest has come up tremendously. And more importantly, it looks like rates and the Fed, at least for now, have peaked. And that's an environment where growth begins to work. And I think that's what we're beginning to see today.
Just to clarify, expectations for rates, Chris, given that they haven't even hiked yet.
That's right. Right. So I usually talk more about what's happening with the market, the expectation of rates. If you look at the 10-year went from, I think, 205 to 170, 170 something. It's bouncing a little bit. I think the 2-year anticipating of a more aggressive Fed went to 160, 160 something. And now I think it's 130. And again, Fed funds expectation. This was really surprising to us. Powell used 25 basis points. Basically, what he wanted to do is he wanted to tell the market that's what we're going to do.
Yeah.
He wanted to take 50 in the near term off the table. That was really that he's signaling to the market. And here's the thing about Powell. What he did at the last meeting is he opened up, he provided himself as much optionality as possible. And that's an environment that's hard to plan. Now he's bringing that optionality down. He's decreasing the number of paths. So now we can begin to plan better. And ultimately, you have to listen to his other words: uncertainty, unknown. In that environment, you don't get real aggressive. And in that environment, it's harder to see what we saw in the first couple months, first couple weeks of the year, where rates were just ratcheting higher unrelentlessly.
I wonder how comfortable he is with that call. As you pointed out, Chris, earlier in the show, if we get that 8 handle on CPI on March 10th, how comfortable he is with that call on March 16th. Morgan, I want to get you the final word. And I appreciate your patience here. Just listening to Chris, listening to Peter, that call about shifting away from the cyclicals and back towards growth. Does any of that work for you?
Well, I would say that on the tech question, we are in an inflationary environment, and tech have been quite resilient to pass on high cost to customers so far. They also haven't been that affected by supply chain disruptions, which we could expect to become again a clear concern as most of the airspace restrictions in the world are setting up. So we are looking at tech as as a sector right here, but even beyond, underneath the umbrella of tech, I would underline that some tech areas, such as cybersecurity, can be seen as defensive trade currently, given the number of cyber attacks we saw in the past few weeks, and that is going beyond just hedging a tech exposure. When you see cyber attacks on suppliers of Toyota, then you can definitely see the importance of cybersecurity for almost all investors. So I would say that given the supply chain disruptions, the heightened disruptions we could expect in the following weeks, and given that the rate path of Western central banks is probably less aggressive than that was pricing probably 3 weeks ago, this is mostly positive for the growth stocks and tech sector overall.
Morgan Down, great to catch up. Thanks for coming on the show. We'll get you back soon, hopefully. Peter Cicchini and Chris Harvey, as always, gents, thank you very much. Before we head off, I want to go over 2 quotes for you. Go back to what we heard from the German economy minister just moments ago, about an hour ago, when he said this: "I wouldn't support an embargo on imports of fossil fuels from Russia. I would even speak out against it." And compare that to the tone of the conversation that President Macron has just had with President Putin. This came from AFP just moments ago. An aide to the French leader said the following: "The president now believes, quote, the worst is to come." This after having a 90-minute phone call with the Russian counterpart, Vladimir Putin. Putin again justified his invasion in terms of the denazification of Ukraine, said the aide, who asked not to be named. The aide described Putin's comments as, quote, shocking and unacceptable, adding that the president told him it was lies. So this is the same situation you have lined up in Europe. If the president of France believes the worst is to come, where does that leave Germany's position on not doing anything about sanctioning Russian energy? And how does President Biden get them to take that next step up in sanctions if the worst is still to come? And that's where there's some tension in this story at the moment, at least. I can't speculate on that for you right now. I'm just lining up 2 quotes for you, and we can try and work out how to reconcile the 2 and how much tension there will be in the coming weeks. Coming up, governments continuing to isolate Russia from the global economy.
This is a fast-moving situation. We've had sanctions implemented on an unprecedented level by government.
I'm a millionaire. I'm not a millionaire. I'm a millionaire. I'm not a millionaire.
Crypto is complicated, but as a tax expert with crypto experience, you can hand your taxes off to me. You do your thing, we've got your taxes. Intuit, TurboTax Live.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
This is a fast-moving situation. We've had sanctions implemented on an unprecedented level by governments around the world. And as you mentioned, FTSE Russell has indicated it will be taking Russian listings out of our indices. And to my point that it is fast-moving, the London Stock Exchange has suspended trading in, I believe, 28 Russian-listed securities as well.
FTSE Russell, not the only ones. Western allies imposing sanctions on Russia, isolating the country from the global economy. The equity index provider MSCI, one of the latest funds exiting Russia, writing the following. The Russian equity market is currently uninvestable and securities should be removed from the MSCI emerging markets indexes. Bloomberg's Taylor Riggs has more. Morning, Taylor.
And John, that quote is so telling because MSCI said, as you mentioned in that quote, surveyed asset managers, broker-dealers, other indices, and sort of that overwhelming majority just said it is uninvestable and you have to be removing some of the Russian securities from that benchmark. What's interesting is this comes as a broader point, and we know that a lot of those securities will be removed from the FTSE 100 and the FTSE Russell, and of course the MSCI starting next week. Those will go to zero. But you've also had some interesting reaction from the ETF world as well. Take a look at this. The VanEck Russia ETF. They are going to be suspending share creation starting Thursday. So that will be the latest to effectively halt inflows as Wall Street's trying to figure out this fast-moving impact, of course, on the economics of this. VanEck halting those shares. So again, halting some of the new cash that enters that ETF until further notice. On Tuesday, you also had BlackRock halting the creation of new shares as well in their MSCI Russia ETF. DWS and Franklin Templeton have also taken similar action. So what's interesting, though, John, I think big picture is that our BI analysts have said that the removal of these stocks from MSCI, from the FTSE Russell indices will have little impact. Again, maybe there's only a 5% allocation in a global EM exposure here to Russia. If that goes to zero, the impact at least should be a little bit little maybe than we think.
Taylor, what a tough moment with that market still closed over in Russia. Taylor Riggs, thank you. Looking forward to the coverage a little bit later on the close with Caroline Hyde, Taylor Riggs and Romain Bostic as well. Company after company, we keep going back to this, don't we? Isolating Russia. VW Group, the latest. Here's the quote. VW Group has decided to stop the production of vehicles in Russia until further notice. Vehicle exports to Russia will also be stopped with immediate effect. On the story, here's Abby.
It really is very incredible, John. Fast and furious, these companies are exiting and cutting off ties with Russia. VW joining a growing list of companies that we've been highlighting this morning, earlier, Kaylee, and of course yesterday. The list is wide at this point. Toyota, Honda, VW, of course, Alcoa, ExxonMobil, not so long ago Nissan, even Formula One ending their contract with the Russian Grand Prix today. The hope, of course, is to provide pressure on that Russian economy and to influence Putin. Relative to the oligarchs, there is pressure there, too, a yacht being seized earlier. But the splashiest, of course, Roman Abramovich, he's selling, as you know, Chelsea Football Club. He's seeking about $4 billion for the sale, also trying to build some goodwill, given the fact that he has so many other assets that could potentially go after. But relative, again, to the motive of sanctioning the economy, the self-sanctioning, the informal sanctioning to hurt the economy, that underperformance relative to the U.S. Stock market, John, is pretty stunning. The SPY, a proxy for the S&P 500, down about 7% this year, heading to its worst year since 2008. But relative to the 76% plunge for the Russian stock market, that's simply nothing. It seems like the self-sanctioning is working.
Abby, thank you. Thank you very much. I just want to go back to these two lines, just to conclude our thoughts here in this particular section. So we've heard from the German economy minister who said this: I wouldn't support an embargo on imports of fossil fuels from Russia. I would even speak out against it. And we've just heard, according to the AFP news agency, from an aide, that the French President Emmanuel Macron believes the worst is still to come in Ukraine after having a call with the Russian President Vladimir Putin. The AFP news agency, pointing out that Putin is aiming to seize the whole of Ukraine. This is according to a Macron aide after the Putin call. That's the feeling of Emmanuel Macron. So you've got the former position, the latter event. That's what we're fearing. Can the latter event materialise without the former position being tested? That's what we need to try and get our head around. OK, so the German economy minister doesn't want sanctions on Russian crude, Russian energy. At the same time, the French president is incredibly concerned that the worst is yet to come. If the worst is still to come, do they have to move an inch, a mile on that energy embargo? And does President Biden step in and push to do the same? That's what we need to work on through this week. From New York, coming up, the Trading Diary, counting you down to Payrolls Friday.
The fate of the world is in your hands.
The U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Did you know most investors, most traders actually will buy a stock and buy and hope? It's called buy and hope. If the stock goes up, they make money, but if the stock stays flat or goes down, they lose money. If you look at that, there's three directions it can go. You have a 1 chance of winning, which means you have a 33% probability of winning. What if you could take that probability and learn something new where you could increase that probability to 60, 70, 80, even 90% that you're gonna win? Hello, my name is Vince Dowd. I'm one of the lead instructors for the Market Mastery Group. The Market Mastery Group is a team of professionals dedicated and devoted to help people like you learn to trade the financial markets, especially using options. Over the last 30 years, I've trained approximately over 300,000 people in over 40 countries on how to make money in the markets. Now, I want you to understand something, that I've spoken on stages with great names like Tony Robbins. Change your life. If you could learn to make 20% per month, what if you only did it 5-6 months out of the year? Would that change your portfolio? Or you could take something like the covered call strategy, which is the most conservative strategy that
help them beat their biggest competitor.
I won! Look for the winning number in Sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos or $68,000 doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the street, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the NBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking, and of course Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees. But for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we had mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue a warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complications due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19 they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
I'm a millionaire. I'm not a millionaire. I'm a millionaire. I'm not a millionaire.
Crypto is complicated, but as a tax expert with crypto experience, you can hand your taxes off to me. You do your thing, we've got your taxes. Intuit, TurboTax Live.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not
let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic they had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack on the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be a ploy by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained one man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venegold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venegold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why he may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Weinergold as an opportunity to leave that troubled home. Weinergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Weinergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Weinergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Weinergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, 1 kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At 1 kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 20, 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small and space is really big. And then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if they, if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's just kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option, it would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. Asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000.
Here's a stock that can change your life.
I see a stock going up and I buy it and I just watch it until it stops going up and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter, it's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers, one of the last holdouts in the world of disruption, finance is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
The Fidelities and the Schwabs and the E-Trades of the world, they look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent
and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. So the next step for them is to figure out how to monetize those users and how, even with their small account sizes, to get them to grow with the...
I'm a millionaire. I'm not a millionaire. I'm a millionaire. I'm not a millionaire.
Crypto is complicated, but as a tax expert with crypto experience, you can hand your taxes off to me. You do your thing. We've got your taxes. Intuit. TurboTax Live.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation was exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money. I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be, 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. People telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't. And the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and StockTwits and Reddit. And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
Soon may the weatherman come to bring us sugar and tea and rum.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big behemoth thing called the stock market that we really don't know a whole lot about, and it's gatekept behind the industry. And so people like want to unpack that. And so my audience is, a lot of them are younger investors who are looking to hone their skills.
Tech and write up.
Kyla and Kayla are two of the more, let's say, professional TikTok influencers.
The Tesla ARK Bitcoin Biotech Risk Cluster.
I've been trading since high school, and it was a really interesting way for me to fill out my decision-making frameworks and to think about thinking. And I think that the more that we can have people thinking about finance, the better that we're going to progress as a society. I think it's a huge gap in our educational system.
If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I made the options video where I was like, options are just like shopping. Rumor has it that this pallet's about to go up in price. So if I come in tomorrow, can I still buy it at said price? And a ton of women just like attacked that video and were like, you explain things so much better than my boyfriend or my professor, or like I could sit and listen to you all day. And I was like, this is what I was looking for.
But TikTok's algorithm does not reward calm and measured videos about responsible investing. It rewards this.
Watch this video for 30 seconds and you'll be rich for the rest of your life.
I try not to say the A word, the ALGO word, because TikTok listens to us.
The algorithm does impact how you feel. You know, you do notice which videos do better versus which videos do worse.
How do you catch someone's attention in less than 60 seconds? And how do you make it something that they're like, I need this in my life? Nearly impossible to do that in 60 seconds. But the people who perfect it are the people that you're gonna watch and gonna stick around.
And where people are sticking around? Reddit. And its nearly countless subreddits about finance. And by far the biggest one of those is Wall Street Bets.
There's a lot of social media platforms out there, but Reddit is like the social media platform for finance. Places like Wall Street Bets is where it all goes down.
Started in January 2012, it wasn't long before Wall Street Bets adopted a 4chan-like etiquette, leading to their tagline, like 4chan found a Bloomberg terminal.
We had all these unexplained stock moves, and we would be grasping for why stock XYZ jumped 20% in a day. And you would look at Wall Street Bets, and you would see people there talking about buying options in that stock, and it sort of, squared the circle, so to speak, and started making sense. And it was at that point that it was like, wow, we have to start paying attention to this.
Some people on the platform really spend tons of time, and others are just looking for entertainment and to have a little bit of fun, effectively gambling or looking for an outlet, trying to make a little bit of money.
Then on top of all of that, there were stimulus checks. Now clearly this money is going to people who need to use that to eat, to live, but there's a lot of people who use this money to invest in the stock market.
And it's not just stock tips. People quote unquote YOLO their entire life savings or stimulus checks on a single stock. They post what is called gain and loss porn, screen grabbing staggering hits and misses on stocks for the entire community to see.
I'm about to lose everything.
And while some of the people on Wall Street Bets are novice investors, the community contains multitudes.
In one respect, what it did show us among these network groups is they are very sophisticated. They're not a bunch of ignorant people talking to other ignorant people.
And this is where the pieces of the puzzle all come together to wreak havoc on Wall Street for a solid week in early 2021.
It's pretty clear that the combination of more people having retail brokerage accounts and trading apps and more people being stuck at home looking for some kind of entertainment and some kind of community online came together in this very singular way.
What came together is GameStop.
Let's go back to the beginnings of what happened with GameStop a couple of years ago. On the boards like Reddit and StockTwist, a lot of people were talking about GameStop as being attractive value.
Some of them are even, Wall Street alums who left the industry and now still have access to tools that they can use to improve their financial well-being and make very good decisions. And I think Roaring Kitty is a perfect example of that.
GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that.
At the same time that this crowd was talking it up, the hedge fund institutional crowd didn't like this stock at all, and it had the largest short interest of any stock in the New York Stock Exchange going into late 2020.
Short selling is a bet that a stock price will fall, and it's a fairly simple concept. An investor borrows a stock and then sells it. The investor is betting on buying the stock back later for a lower price before returning it to the original owner, pocketing the price difference.
What a short seller would tell you is that they almost act as a policeman in financial markets, or they're at least looking for companies that aren't what they say they are. And that can range anywhere from an outright fraud that some short sellers try to expose to just a company that's not worth as much as investors think it is.
The problem is, if the stock price rises, the short seller has to come up with the money to buy the stock back. And the more it rises, the more it costs. And that's what's called a short squeeze. And the hedge fund Melvin Capital was on the wrong end of that squeeze.
Melvin Capital lost over 50% of its money in the month of January alone, just from being caught in the short squeeze of the stock.
This is where the disruption comes in.
One of the most wild stories you're ever going to see. GameStop shares absolutely going nuts.
In less than a year, the company's stock has jumped from less than $3 a share to almost $350.
Cheers, everybody!
Roaring Kitty has turned $50,000 or so investment into some $14 million.
Whoa!
Investors all over social media use the free trading app Robinhood to wreak havoc on Wall Street.
They're actually piling on into some of these stocks to really hurt the professional short sellers.
And they all used Reddit, Twitter, TikTok, and Discord to tell one another to keep buying and, quote, hold the line and not sell GameStop.
People are getting cheerleaded for jumping in, buying at the highs. They're saying, keep going.
And it was working too, until
Thursday morning, the trading app Robinhood sent out this tweet. In light of current market volatility, we are restricting transactions, including GameStop.
People were really angry.
Robinhood was supposed to allow the regular people to play the same game these big boys are playing. But instead, we were all taken for schmucks, and they screwed us.
Shares of GameStop are jumping again now that retail investors are being allowed to buy shares of the stock.
But what we learned is that when people organize online, they have the ability to disrupt the market.
And it was a big sign. The ivory walls of the institution aren't as powerful as maybe the institutions thought them to be. I don't know if pumping up GameStop was the best use of billions of dollars, but I think that as a signal to society, it was pretty interesting and powerful.
The GameStop saga was so impactful